from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance. Let's take a look at Bitcoin in the past week. It's actually down just since President Trump's geopolitical threats on Greenland and the European Union and the aftermath. Look at this. Over the last 8 days, down about 4.8%. So his comments last week spurred some debate around the debasement trade. Interestingly enough, at the same time, the S&P 500 fell, then more than recovered, Scarlett hitting a new all-time high today.
So, and the crux of that debate is that Bitcoin should benefit from a dollar debasement trade, except it's not. Here's a chart of Bitcoin versus physical gold, and gold is, of course, in yellow. The chart starts in October when Bitcoin made its last record high. Since then, investors have pulled more than $1.3 billion from Bitcoin ETFs and other Bitcoin-linked funds. Meanwhile, gold just continues to climb higher. It's now well above $5,000. It turns out holders of Bitcoin are more influenced by risk appetite and liquidity, things that drive stocks, and less sensitive to inflation concerns and fears of debasement, things that drive and have benefited gold.
I'm so interested in this because I thought that Bitcoin was the so-called digital gold, but we've seen gold as a beneficiary, but not necessarily, the quote-unquote digital gold.
Exactly. So maybe everyone has to rethink that debasement idea here, at least as it relates to Bitcoin.
Okay, well, let's get to some digital assets, at least when it comes to traditional finance. Morgan Stanley just this week tapping longtime executive Amy Oldenburg for a newly created role as head of digital asset strategy. Bloomberg's Catherine Doherty covers the banking sector. Kat, is this just a sign that TradFi is getting more into crypto?
I do think that this is a step forward, at least for Morgan Stanley. All of the banks have started to come out publicly and express their path forward as it relates to exposing their clients to crypto, whether that's trading, custody. There's various flavors and really levels to which these banks have either dug deep or are just starting. I would say that Morgan Stanley is kind of on the more just starting camp. You have firms that have been in this space for a while. JP Morgan is a little bit further down the road. They have announced their own efforts with regards to working with Coinbase. But with today's announcement, it's really Morgan Stanley's commitment to furthering their efforts as it relates to crypto. They previously had filed earlier last month for ETFs that are all crypto related. And last year they made an announcement about working with this cryptocurrency infrastructure provider, Zero Hash, and that's to expose their E-Trade clients who want to trade with them. So they have already made some announcements, but this appointment is really, here's how we're going to engage both internally, organize the company, make sure that we have our crypto-related initiatives going forward, and then also this appointment is going to be a path forward to connecting with crypto-related companies that they can work with outside of Morgan Stanley to further their efforts as well.
Oh, so like investment banking clients, that kind of thing too. How much do you read into this being an offering on the wealth management platform? Because that is Morgan Stanley's bread and butter. I mean, investment banking is certainly a big part of the firm, but where it really gets its stability is from that massive wealth management business.
Yes, and also this Amy Oldenburg, she's coming from Morgan Stanley Asset Management. So she's had this experience and she's been at the bank for over 20 years. This new role that she's going to be stepping into, she's going to help both connect the asset management side, the wealth management side. She's going outside of her current purview. She had been previously head of emerging markets within MSIM. So now I believe that this is Morgan Stanley's, again, commitment to connecting all of the various businesses, wealth being one of them. And you are right, wealth is really a core to their client strategy.
All right, good stuff. Catherine Doherty, thank you so much. Catherine Doherty, of course, covers the big financial firms and banks here for us at Bloomberg. Now, let's bring in FG Nexus CEO of Digital Assets, Maja Vujinovic. Maja, thank you so much for joining us. Let's pick up where we just left off with Catherine, which is this idea that TradFi is increasingly doing what it can to build up its portfolio of digital offerings. What do you think when you hear something like Morgan Stanley building out and creating a new role of a head of digital asset strategy? How do you see that playing out, and does that pose as competition for the crypto native firms?
Yeah, I think it just reinforces really everything that we've been kind of standing for in this space. Morgan Stanley has entered the space, I think 2015, 2016, they started looking at this, and then 2018, 2019 started kind of learning more about it. And, it takes a while for these banks to come on board. But I think, Tim, to your earlier point in your question, really, it is a bit of a conundrum, right? Gold is pulling, everybody thought Bitcoin is, but what more of a confidence do you need to have than Morgan Stanley coming into the space and announcing they've just hired a head of digital assets, right? What I think is really important is that we don't fall into that noise and we keep, kind of going into the side of that, negative space of listening. Hey, look, Bitcoin is not really pooling. The gold is. Really, gold is a hedge that people buy when they're first scared, right? And then Bitcoin is a hedge people buy when they're confident that enough to take the risk. And that doesn't really break the debasement thesis. It explains the kind of the timing difference. And really, this announcement from Morgan Stanley is just another, I would say, a confident approach to Bitcoin.
So let's stick on the gold versus Bitcoin thing here, because if indeed what you're saying is true, that people buy gold when they're scared, why have they been buying gold for the last 2.5 years? And why have they been buying so much gold over the last 2.5 years? And over the last, let's say, 4 months, not necessarily buying Bitcoin when we've seen gold surge?
Yeah. I mean, look, Bitcoin is still there, right? ETFs flows reflect that positioning. It's still there. It just hasn't been, we've seen that surge, Tim, to your point, because look, you've had a very, I would say, shaky global markets. You've had geopolitical uncertainty for sure. You've had a dollar falling off. Last year was the first time 11% down in a long time, right? I mean, this is a real issue. A lot of folks are asking where to put their capital. And so I think people understand gold, right? That's it's been around since we at least have been born, and even prior to that. So people just go to something they understand very well and they think it's a safe asset. However, though, if I look at the younger generation, which to me is more interesting, they're all going into assets that for them, they're going into Bitcoin, they're going into land, not necessarily buying gold. And so I think that all changes soon as kind of, as I've said, gold is first, and then you start to have Bitcoin and the other risky assets.
That might be one part of it, but crypto, let's be realistic here, is very much a speculative asset for a lot of people, including young people. And it feels like young people have a lot of different options when they want to speculate now. They don't just need to confine it to the crypto space. There's obviously the altcoins, which have done worse than Bitcoin, but there's also prediction markets, which are definitely gaining in popularity. There's also, meme stocks, the revival of meme stocks. There's various avenues for them to go to if they want to speculate that. Bitcoin has become kind of, the old school way of doing things, I suppose, for some of this younger generation of investors.
Yeah, Scarlett, I think you bring up something really important, which is that everybody's scattered. I think it's a fact that most people don't talk about. They kind of just say, okay, well, people are investing in gold or Bitcoin or real estate, right? Reality is that you're right. Everybody's all over the place at the moment. I do think, though, when you look at the crypto assets, there's no doubt in my mind that technology is there. The fundamentals are there, right? It's part of the reason at FG Nexus we have chosen Ethereum, because it doesn't matter the price at the moment, right? The things will pick up, and institutions like Morgan Stanley, JP Morgan, and the rest are building on these assets. And so I think it takes, there's also quantum risk that was brought up, right? And that was also a bit of a scare a couple of months ago, where people thought, oh, shoot, right? Maybe this is something that we need to worry about. And this is something that, but that's slowly being, right, taken down. And yes, quantum is there, quantum is coming, but it's very far away from you worrying about your email or Bitcoin.
At what point would you start to worry about those things, Maja?
Yeah, it's a great question. I would probably say in the next 2 to 3 years will we start to really look at it. I don't know if you saw what Coinbase put out yesterday. They said that this is certainly their priority, and this is what they're thinking about, and making sure that they have risk management when it comes to any threat, not just the quantum. So I would say next 2 to 3 years, you're going to start to see a pickup in that conversation. And not just, by the way, Bitcoin, you're going to start to see it across everything that we do. And I think you brought it up earlier around AI, particularly in AI. I think that's to me bigger scare than it is for Bitcoin.
All right, FG Nexus CEO of Digital Assets, Maja Vujinovic, thank you so much for joining us today.
Thank you so much.
On Bloomberg Crypto.
Thank you.
Coming up, a new report shows crypto-related money laundering hit record levels last year. The CEO of Chainalysis and co-founder Jonathan Levin will walk us through their findings. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Illicit crypto money laundering surged to more than $82 billion in 2025. That is according to a new report from blockchain and analytics firm Chainalysis. And it turns out Chinese language laundering networks were the main perpetrators. Joining us now is Chainalysis co-founder and CEO Jonathan Levin. So, Jonathan, just give us a little bit more of context here around the role of Chinese language money laundering networks. How responsible were they for the crypto crime that we saw in 2025?
So what we've seen in the history of money laundering, as you just showed the chart, is that we've seen an increase in money laundering networks in crypto as adoption of crypto assets has continued to increase. Now, last year in 2025, we saw $82 billion being laundered through these money laundering networks using cryptocurrency rails, of which we've seen a massive increase in the amount of Chinese-based money laundering networks that have, now got 20% market share, so $16 billion in laundered proceeds last year. And this has been a new development on Telegram and using a whole variety of different methods to actually facilitate money laundering of illicit proceeds from things like romance scams that you've heard a lot of on the news.
Yeah, I'm not just interested in how they get the money. What I'm interested in is why they think cryptocurrency is a good way to do this, because isn't cash still king when it comes to money laundering, when it comes to fraud, when it comes to illicit use in currency? Cash just blows everything out of the water, right?
That is correct. I mean, when you think about the way in which cash is used, or traditional finance or real estate or trade-based money laundering, those numbers are still much, much higher than what we see inside crypto. The interesting thing, though, is that the specific assets that people are able to identify in crypto are identifiable as money laundering, whereas the estimates on cash and on real estate and on trade-based money laundering are just overall percentage estimates of the overall activity. And so the great thing about crypto is that we can actually identify the activity. Now it gets to the challenge of how do we disrupt that activity?
Yeah.
How do we make sure that we can have effective ways of getting and infiltrating these networks?
Well, not all cryptocurrencies are the same, but my understanding is that one of the reasons why it's not necessarily great for money laundering is because oftentimes we can, and well, not we, you at Chainalysis, can actually track where that cryptocurrency is going on the blockchain. So why are people using it, and how are they using it if it can be easily tracked by firms like yours?
Well, what we see is that every type of business, and whether that is a business that is in the business of organized crime, or whether that's a business in terms of global logistics, want to be able to move money instantaneously, programmatically, very cheaply, anywhere in the world, in an instant. And that is something that both business demands, individuals demand, and organized crime demands. And at the end of the day, organized crime are profit-motivated global businesses that are willing to take more risk than anyone else. And so they really are early adopters of any type of technology. And a universal global instant payment system is something that the world needs. It is also something that organized crime will take advantage of.
My question for you is, clearly there's a lot that governments and policymakers misunderstand or underestimate when it comes to this illicit use of cryptocurrency, especially when it comes to money laundering. Have they got in touch with you? Are they looking to Chainalysis for proposed solutions? Do they give you any feedback?
Yeah, we at Chainalysis provide solutions to both the public sector agencies that regulate cryptocurrency. We provide it to law enforcement agencies that are investigating public safety issues. And we also provide it to intelligence agencies that are responsible for our national security. And so all of these agencies now have Chainalysis data, technology, and services at their fingertips to gain this intelligence about these types of networks and design disruptive operations to take them down and prevent further harm from happening. And we've been very involved in recovering tens of billions of dollars in criminal proceeds and returning some of those funds to victims of those crimes.
Is it enough to for the enterprises that you study not to have an incentive to do the crimes?
I think that when it comes to this, it's not enough to just say that law enforcement and national security agencies and regulators are on top of it. We actually need to build disruption into the planning. And really what we have seen change over the past year, particularly when it comes to the Chinese threat, is that this is now moving at a very fast pace. Money is moving programmatically. And we publish in our report how quickly and effectively, some of these networks are able to leverage the programmability of cryptocurrency. And that means that the government agencies need to have data at their fingertips and need to actually design mechanisms of using AI and automation to go after these types of threats. And we're not quite there yet in terms of adoption from global governments to be able to tackle this type of threat moving forward.
So we're not there because the governments haven't bought into it, or because you don't have the technology yet to be able to disrupt it? Like, if you could wave a magic wand around the world and have these governments adopt this technology, would that be enough?
Yeah, I think it would be enough. I mean, what we've seen is that there have been instances where criminals are always adapting, and it is a cat and mouse game that will continue. But if governments have real-time data at their fingertips and are able to target these types of operations using scalable collection mechanisms like Chainalysis, there are avenues of actually disrupting some of these networks, both in the cyber realm, but also in the physical cash realm, that are necessary to inflict massive pain on these organizations. And governments around the world have been sanctioning some of this Chinese money laundering operations. And we need to do just much, much more of that in order to be able to disrupt this type of illicit activity.
Jonathan, we talked earlier about how Morgan Stanley has appointed a new head of digital asset strategy. So clearly the traditional financial firms are very much increasingly getting into crypto. Given what you've found in this report, are they ready for this? Are they prepared to keep their clients' investments safe?
Yeah, I think what we have done at Chainalysis over the past year is we've also not just been investigating these networks, but we've also been building solutions to allow for prevention of theft, prevention of scam activity from impacting the users of financial services firms. And what we have done at Chainalysis is make sure that we're doing all of that collection under the hood. And we're packaging up this intelligence for both the government, but also the banks, the fintechs, and the cryptocurrency businesses, so that they can be compliant with their AML obligations, that they can prevent fraud in real time, and that they can secure all of their on-chain infrastructure. And what we're seeing from banks like Morgan Stanley is that they are coming in with a much higher level of expectation of risk management than the industry. And they're building new standards of security, fraud prevention, and compliance that I think will provide a safe and secure place for everyone to hold and benefit from digital assets.
Jonathan Levin, Chainalysis co-founder and CEO, joining us from New York. Jonathan, always good to see you. Thanks so much for joining us on Bloomberg Crypto. Hey, coming up next, the Tether launches a U.S. stablecoin. We're going to have those details in just a minute. This is Bloomberg. Tether has launched a U.S.-focused stablecoin known as USAT, issued by Anchorage Digital. Bloomberg's Ana Herrera joins us from London. Anna, for somebody just tuning in right now, what are the differences between this stablecoin and Tether's other stablecoin, USDT?
So obviously both are dollar pegged, which means one stable coin equals $1, and it's supposed to maintain that peg. The main difference is that the new one is available for companies in the U.S., and that's a very big difference because, in theory, USDT is not available for companies in the U.S., but it is the biggest stable coin by far and vastly. It has a circulation of 186 billion, and Tether is sort of the undisputed leader in the space. So this marks their re-entry in the U.S., and it's quite interesting to see what will happen for competition there. You know, it is compliant with the Genius Act because it is issued by Anchorage Bank. And it's interesting to see who will adopt it and how the competition sort of landscape will play out, especially with Circle, which has been sort of the leader in the US.
Right, and USDT, the original stablecoin that's technically not available to US-based investors, is backed by short-term treasuries and other cash equivalents. Is that the same for this new USAT?
Yes, and the reserves will also be managed by Cantor Fitzgerald, which is very interesting. As we know, Tether has been making a lot of money from the reserves because treasuries the yields are high, and so until that changes and interest rates go down, the reserves are another interesting component. But yeah, it will also be backed by sort of U.S. treasuries, which make it more liquid and easy if you have to redeem it. Right, if you're a stablecoin holder and you want your money back, it has to be held in something that can be easily sold and you can get your money back.
What we're showing the ecosystem of USAT right now, but what is the value use case for a US-based company, just in 30 seconds?
So I guess, stablecoins, we say they're very useful for payments, but for now, in reality, they're used massively in crypto trading. So it's a way for crypto firms and trading firms to get in and out of positions without having to move into real world cash, because that would make it too complicated. But you can't also not keep it all in Bitcoin or other cryptocurrencies because those are too volatile. So perhaps as crypto becomes more mainstream and more firms start trading it, then this will make it easy for institutions to use essentially the stablecoin from one of the biggest providers.
All right, Ana Herrera, thank you so much. Tether returning to the U.S. market with the launch of this new stablecoin called USAT, because the USDT not available technically to Americans or those based in the U.S. That does it for Bloomberg Crypto this week. Please join us again next week when this show expands to a full hour, Tuesdays at noon Wall Street time with Tim Stanley and myself. From New York, this is Bloomberg.